So how you guys doing? So this is Leonard coming from Legendary Legacy Group. I'm here to share some information with you guys. I just left a client about an hour ago, and this lady she's an older individual, and I had to sit there with her, do a review for her on her insurance policy. You know, we're in financial services. Me and my wife, we like helping people. We like what we do, but it was heartbreaking to go and sit with this older lady that somebody sold a policy to, and she didn't really understand what she was in. So what I want to do today is show you guys the 5 types of insurance. So I'm gonna start off with one that a lot of people know about. That's a term policy. Okay, so the 5 types of insurance for every day this week. I'm going to go through the 5 types of insurance. The 5 types of insurance that are close to me, near and dear to my heart, that I try to educate people about, share something that they might not know about. So that's what I'm going to do today. All right. So 5 types of insurance. So the first one I'm going to talk about is term insurance. Okay. So when you talk about term insurance, what is that really saying? What's the word? Term. So that means it's only going to last for a certain amount of time, for a certain period, for a certain term. So a term policy usually lasts 10 years, 20 years, or 30 years. That's the time of the term. Okay, 10 years, 20 years, or 30 years. There are some 15s in there, and there's some companies out there that'll go longer than 30, but usually it's 10, 15, 10, 20, or 30. All right, that's the length of the term. Some of the benefits of a term are that it's really cost-effective premium. So cost-effective premium is what you're going to be paying every month. That's what the insurance companies call your premium. Okay, so it's real cost-effective. With that, you get a high face amount or death benefit. So they might refer to it as one or the other, high face amount or a death benefit. Okay, face amount and death benefit are interchangeable. One of the other benefits is something called living benefits. Now, some companies call this accelerated benefit riders, but we call them living benefits. Why? Because it's life insurance. Living benefits are supposed to help you while you're alive. So that's where terminal, critical, and chronic come in. So basically, it's added feature that's with most insurance policies. Some only have terminal, but make sure you have chronic and critical included with your policy. So basically what they're saying is with terminal, it's saying that you went to a doctor and you've been diagnosed with something where you're not going to live past 2 years, 2 to 3 years, depending on the carrier. Most of them are 2 years. A few have 3 years. But the doctor says it's a terminal illness or disease and you're not going to make it, okay? So what that does is you can access some of your face amount or your death benefit while you're alive. Critical is if you were to get something like, everybody knows somebody who's had a heart attack or a stroke or severe diabetes, things like that. So that's where critical comes in. That's saying, yes, you've suffered this affliction, you suffered this disease or this illness, but you will get better in a certain amount of time. You're not going to pass away in 2 to 3 years. You will get better. The prognosis is for you to get better. Chronic is if you can't perform 2 of the 6 daily acts of living. So what is that? Getting up, putting your clothes on by yourself, going to the bathroom, walking room from room. When you use the washroom, can you clean yourself properly? Can you shower properly? 2 of the 6 daily acts of living. That's chronic. So if you can't do 2 of those 6, your insurance company, you just let them know you can't do it for a 90-day consecutive 90-day time frame without assistance, someone in your house or medical assistance. You should get some of your face amount or your death benefit while you're alive. And one of the last key points of term insurance with most of the companies that my wife and I represent is that it's convertible to a permanent policy. Some of these companies out here are, they'll sell you a term policy and tell you it's going to last you for the rest of your life. Remember, guys, term is for a certain term. So it's not going to last you the rest of your life. But some of these policies are convertible to a permanent policy before the policy ends. So remember, I said the policies usually go 10, 20, or 30 years. So before your 10th year, you can convert a portion of that policy to a permanent policy. So right here, I have the example of a 30-year-old, and then they're going to have a 30-year term policy until they're 60 years old. They're doing $100 a month. That's what they're paying as far as their premium, and they have $500,000 as their face amount or their death benefit. Okay, so with the 10-year, if you're doing $100 a month, 100 times 12, right, for the years, 100 times 12 times 10, that's $12,000. So at the end of those 10 years, you've put in $12,000 into this insurance policy. If you pass away or you come down with one of these situations where you need the living benefits, you can access the money. But if you don't, after those 10 years, the policy is done, right? Because it only lasts a certain term. Some companies will give you a piece of paper where it looks like the policy lasts until you're 100 years old. You got to read the fine print. That's what happened with the young lady that I went and saw tonight. Somebody sold her a policy, and it was pretty much a 20-year policy that she has, right? So with the 20 years, let's just say she's paying $100 a month, has $500,000 in coverage. So 20 years times the 12 months times $100 a month times 12 months times 20 years equals $24,000. So after those 20 years, this young lady would have paid her money into this policy, but she was of the mindset, because somebody told her this, that the policy was going to continue till she was 100. Well, I just went in and I showed her that policy is going to end in 4 years, right? So she's been in it for 16 years, and another 4 years that policy comes to an end. That $100 a month that she's been paying is gone, unless in year 11, her $100 a month is now going to go up to $200 a month. In year 12, it's going to go up to maybe $400 a month. And on and on and on. It's just going to be so much of a burden that she's not going to be able to keep that policy. But that's what some insurance carriers will show you, that the policy keeps going, but you got to check the fine print and check the numbers. Yeah, after that 10th year, that 20th year, that 30th year, the policy ends. But if you don't tell the insurance carrier, hey, that's it, they will keep charging you for the policy. And the policy, the amount that you're paying is going to be a very high, not a very cost-effective premium. It's going to be a high premium. All right, so that's something that you guys need to look into. Pay attention to that. If you guys need any assistance with any of this, me and my wife, we talk to people. We want to share information with you guys. We want to make sure that if you get yourself some kind of insurance policy, that you know exactly what you have. We do free consultations, free reviews of what you have to make sure that you're on the best thing for yourself. You can contact us at legendarylegacygroup.com. That's our website. You can email us at llg@legendarylegacygroup.com, or give our business number a call, 773-458-0020. We should have it up in like one of these tickets. I'm going to have my wife help me with this video after I'm done. You guys have a great rest of your evening, and be blessed.